Welcome back. Next week, the administration unveils its plan to overhaul the nation's financial regulations. The rollout follows the announcement this week of rules on executive pay and the appointment of a special master to oversee compensation at a number of firms receiving TARP funds. With me now is Bloomberg's Lizzie Leary, and in our New York newsroom is Bloomberg's Christine Harper. Lizzie, the administration has created this pay czar on executive compensation. Tell us about what he's going to do and who is he?
Well, I think the term special master is important because what it implies there is some degree of impartiality, being above the fray. Ken Feinberg is not going to take a salary for this.
Who did the 9/11 commission compensation.
Exactly. Did the compensation for family members. So the idea here is for firms that need exceptional assistance, and they haven't really defined that, but it basically means anything beyond the regular capital injections. Right. He gets to really kind of look through all their books, look at their bonus structure, look at their salaries, keep things in track with the Dodd Amendment, which Congress passed in the stimulus bill. And the idea here is that if there are things he finds excessive, he can step in.
He's a guy who comes in with a lot of respect on this kind of issue.
A lot of respect, and I think that was a very deliberate choice on their part. They don't want the implication that they're meddling in salaries. Geithner said that very explicitly.
And the congressional reaction?
Like you said, he's very respected.
No, but how about the whole deal?
Well, the whole deal, I think, in some part, has been pretty favorable because they said, listen, these firms are taking a lot of taxpayer money. We want someone overseeing the compensation. You did have a hearing where Gene Sperling, counselor to Secretary Geithner, was pushed on what that exceptional assistance means. And that's a sticking point for Congress a little bit, and also whether this goes, as some of these expanded SEC powers do, beyond just TARP firms, but to all public companies.
Congress may want to meddle a little bit more.
Yeah, they like meddling.
I know. Christine, does this have Wall Street quaking in their Guccis?
No, I mean, I think Lizzie explained it well. I mean, there's only a few companies that are going to be affected by this, and a lot of the other companies are getting out of the TARP money altogether, and they won't really have the restrictions that they were worried about since February at all.
And was this one of the reasons that those 10 banks got out of the TARP funds?
Yeah, absolutely. I mean, you know, the big problem with TARP became the Dodd Amendment that was passed in February in the stimulus bill. And that's where Chris Dodd came in and set absolute caps on bonuses for the top 25 employees at these big banks. And once they repay TARP, they're out of that entirely. The only thing that they may have to abide by are some general guidelines. Maybe they'll have to give a say on pay to their shareholders. That's non-binding, so it won't necessarily prevent them from paying high bonuses.
How about Citi? It's certainly going to be affected, and how worried are they about this?
Sure, they're going to be affected, and I think Bank of America is the other big bank that will be as well. I mean, if you think about Citigroup, you know, they have something like 300,000 employees, and this will affect 25. Maybe 100 employees will have, Feinberg will have some say over what they get paid. But so, I mean, in the scheme of things, it's not that big of a deal. And I think there's a degree of resignation at these banks that, you know, they are in an exceptional case. They're not making a ton of money, so they can't really pay that much anyway, and they have to kind of accept it.
Christine, the FDIC, Sheila Bair, as you know, seems to have her sights on Citi. Will Vikram Pandit survive as CEO?
Well, I think there was a key point this week where Citi got the go-ahead to go and start the conversion of its preferred stock into common stock. That's actually putting in place the government's 34% shareholding in the company. And that the discussion about management seemed to be in the lead up to that. Once that went through, the sense they got was that for now, Pandit's okay. Obviously, if something comes up in the future that is questionable, you know, his job is still under scrutiny, but I think for now he's going to live another day.
When is it reasonable to expect the government will cease being a principal shareholder in this stock, and will the taxpayers get their money back?
Well, you know, we have a story today that already Citigroup has provided taxpayers with a 7.5% gain on their investment since October. So that obviously helps management, you know, in terms of its perception. And it also makes it look like maybe taxpayers will get a payback down the road. Obviously, everything depends on what happens to the market. If there's some big break in the economy, it could change. But for right now, there's a lot of optimism, I think, at the company that they could return the money sooner than people are expecting.
Lizzie, next week the administration is going to roll out its new financial re-regulation scheme. Does this reflect a strong consensus or a capitulation?
How about compromise?
Okay.
Look, the administration first envisioned this as the grand rewrite of financial regulatory rules. But it's also important to look at, there are a lot of agencies in Washington that have grown up throughout the years. They have different cultures, they have different staffs, they have different budgets, and they do different things. So the administration does want the Federal Reserve to take a much larger role, but that doesn't mean that all these other agencies go completely off the board. But you're going to see a lot more power go to the Fed. I suspect you're going to have a fair amount of congressional blowback on that in particular.
The Fed really is the big winner. But the SEC is also a winner in that there was talk beforehand that they would be a loser. And Tim Geithner actually wanted them to be.
That they could have been a loser. The questions about their oversight of mutual funds. The SEC is going to have some more power, potentially, if these executive comp positions go through as well. I would also expect, though, that you will have some more power in this new Consumer Financial Products Commission that they've talked about. That, maybe that's a sop to populism, but it does kind of help people who have felt a little bit at sea in this crisis. Basic Americans feel that there's someone looking out for them for the things that they deal with every day, like credit cards.
Christine, any reaction yet to Wall Street, even though this isn't going to come out till next week?
Just apprehension. Nobody knows what's coming, I think, very clearly. I think there's some optimism that it won't go as far as people had been talking about earlier this year. Obviously, the market improvement has made a big difference in the way people see these banks, and the economy seems to be turning around. So they have a little more leverage now to tell the administration not to crack down as hard as it looked like they would earlier this year.
Well, you two are a dynamic duo on this stuff, and I can't tell you how much I learned from you. Thank you both very much.